Have you ever noticed a bullish candle that opens with a gap down, but then completely takes over and pushes up deep into the previous red candle's body? That's the piercing pattern. And it's one of those subtle but important patterns traders watch for as potential signs of momentum shifting from sellers to buyers. In this video from House of Trading, let's break down how to spot this pattern, what it really shows, and how it's performed in real trades in the Indian stock market. So first, how do you identify a valid piercing pattern? A piercing pattern usually forms under a few specific conditions. First, it should appear after a downtrend, not during a sideward phase. The next candle opens with a gap down, suggesting that sellers are still in control, but that doesn't last. During the session, buyers step in and the candle closes deep into the body of the previous red candle, ideally above its midpoint. The deeper the close, the more significant the pattern tends to be in the eyes of traders. This pattern doesn't predict reversals on its own, but it signals a potential shift in sentiment. Now, let's look at how this has played out in real market examples. On the 22nd of April 2021, a piercing pattern appeared in HDFC Bank, and it formed right near a key support zone. What followed was a 6.3% rally in just 4 days. After a brief correction, the stock continued rising all the way till 1st June. Then, on 14th February 2024, Titan gave a similar setup, a piercing pattern near support. The result, a 6.5% rally over the next 16 candlesticks. On 16th November 2023, Bajaj Finance formed a clean piercing pattern, again near the support. Over the next 22 sessions, the stock gained 7.5%. A particularly strong move came from NMDC, where on the 21st December 2021, a piercing pattern showed up at a strong support zone. The stock rallied 10.5% over the next 17 bars. These are classical setups. Piercing pattern plus strong support is equal to higher probability of a bounce. But what happens when this pattern forms without supports? Let's take a look. On 20th October 2022, Hindustan Unilever formed a piercing pattern, but it wasn't near any key support. It moved up just 1.5% the next day and then crashed 5% over the next 2 weeks. And on the 14th December 2021, GAIL showed a similar pattern with no support beneath. The result, a 7% crash in just 4 days. Same case with Yes Bank on 5th November 2024. A piercing pattern showed up, no nearby support, and it fell 7% in just 6 sessions. So what can we take away from all of this? The first one, a piercing pattern often reflects a temporary shift in sentiment when buyers fight back after a strong sell-off. However, its reliability improves significantly when it forms near a strong support level, a zone where buyers are likely to re-enter. Without that context, the pattern often fails to sustain the upside, as we saw in GAIL, Hindustan Unilever, and Yes Bank. And most importantly, never act on this pattern alone. Always wait for confirmation, whether it's volume, follow-through candles, or support zones aligning with your setup. So the next time you see a piercing pattern, pause. Don't react immediately. Look for location, look for confirmation, and then decide if it deserves your capital. That's it for today's deep dive into the piercing pattern. If you enjoyed this breakdown, subscribe to House of Trading and stick around as we continue decoding candlestick setups like gravestone dojis, haramis, tweezer bottoms, and more. And as always, with real live examples. Until next time, happy trading.